everybody, Nate here, and our economy has had some pretty good signs as of lately. The stock market has been going on a little bit of a rally, and Federal Reserve Chairman Jerome Powell says that we are finally in deflationary times, but not everybody thinks the economy is going in the right direction. Michael Burry, the famous investor that predicted and profited off of the 2008 housing market crash, is back in 2023, and he believes that our economy is only getting worse day after day. Just before promptly completely deleting his Twitter account, he put out the ominous message to sell. So what exactly does Michael Burry see that the rest of the stock market and the economy doesn't? Well, Michael Burry believes that the entire economy and our United States federal government has a debt problem. And this debt problem is going to cause a stock market crash, inflation to only get higher and worse in the United States, and a multi-year recession. And the question now is he 2 for 2 for predicting economic doomsdays? This debt problem that Michael Burry is referring to recently reared its ugly head once again in the United States because the US almost completely defaulted on its debt. In fact, it's still working on some dealings and some cutbacks in order to make all of its debt payments by June of this year. But Michael Burry isn't really that concerned with the United States defaulting on its debt. No, he's concerned with the United States taking on too much debt. It is predicted by the year 2025 that the interest payments that the United States makes on all of its debt is actually going to exceed its entire military budget, which right now is well over $600 billion. What you need to understand right off the bat is the United States is a non-profit entity, meaning that they don't have a product to go out and sell people. No, they only can get money in two different ways. For one, they can tax people more. So if costs rise for a local, state, or federal government, then that means that they have to figure out ways to bring in more revenue, which means they have to figure out ways to tax people more. Taxing people can really only solve so many issues though, because people only have so much money to give, and you can't just tax them to death because that means they're not going to be able to contribute as much money to society. So that is a big problem, and right now and over the last few years, the United States has run into a tax deficit, meaning that it borrows and spends way more than it's actually bringing in tax revenue. But you're probably thinking, well, that doesn't really matter, right? Because the United States is still functioning. So does taxes really matter? Well, they do. And the only reason that the United States not bringing in enough taxes has not really been that much of an issue is because the United States is a currency producer, meaning that they can create and print as much money as they want to kind of meet the difference. So when the United States doesn't make enough money in tax revenue, then it turns around to the Federal Reserve and asks the Federal Reserve to tell the Treasury that they need to print more money. They can then print as much money as they need to in order to cover all of their bills, but this creates a big problem: inflation. That is what Michael Burry is concerned with. He believes that the United States is just going to continue to bring on more debt and more debt and more debt, and they're going to have to print their way out of it. That means that inflation is going to stick around for a very long time in our economy, and that's going to cause a variety of other issues. I mean, we're already facing high inflationary times with people not making enough to meet ends meet. They're not buying products, which hurts our entire GDP and our economy's ability to grow. Not to mention, everything kind of gets thrown off in price. You can go to the grocery store one week and expect certain prices, and then go the next week and prices might be completely different. That is exactly what inflation does. It eliminates all of the value that your money has. So you don't have as much buying power, and you need a lot more money in order to go out and buy things. And this can create a vicious cycle if you just keep printing and printing and printing. Michael Burry believes that the United States federal government is just going to keep printing and printing and printing, and that is going to keep inflation really, really high. Now, normally when inflation is high in an economy, that means somebody like the Federal Reserve or a central bank raises interest rates to make it really, really difficult for people to go out and spend money. That is exactly what we are experiencing from our Fed in 2023. The Federal Reserve has raised interest rates very, very quickly and aggressively in order to bring inflation down. And to their credit, we have started to see inflation generally come down in our economy, but there still are a few sectors that are going up in price. At the end of the day, what raising interest rates does is bring demand down in our economy. It forces demand down because people literally just can't go out and spend money. They can't get a mortgage because mortgage interest rates are way out of their price range. They can't get an auto loan. They can't spend on their credit card. So that slows down your economy. And when you have an economy slowing down, inflation also goes down. But if you couple that with the United States federal government continuing to spend money because its debt is only growing and growing every single day, with the fact that the Federal Reserve is raising interest rates, now you have high inflation and also a situation where people can't really spend any money. That is the recession that Michael Burry is referring to. Michael Burry does talk a little bit about how the Federal Reserve might end up cutting rates in 2023 and 2024, but that's not really going to help our economy either, because it's just going to mean more government spending and more corporate spending, because it's going to be easier for all of these different entities to come across and spend money. So that's just going to keep inflation higher for longer, but he says that the Federal Reserve can't do anything else, because if it just raises interest rates with the federal government spending money, then that is a bad situation too. Ultimately, this is a debt concern because we have too much money floating around in our economy, because in 2020 and in 2021 there was a lot of stimulus and a lot of tax incentives for Americans and businesses. That meant the United States federal government was in a huge deficit and it had to print its way out. At the start of 2020, we had around $3 trillion in circulation. Today, we have over 20 trillion. That is a lot of money floating around. People have a lot of money right now, even if it's just in their savings accounts and they're getting ready to spend it. But once that money is gone, nobody is going to spend. So when you have high inflation where people can't spend money, businesses have to keep giving out raises because people aren't making enough money, and you have high interest rates, now businesses can't get any money from sales because people aren't making enough money. And they also can't get anything from Wall Street or private investors because nobody's willing to take on the risk of taking out a loan right now to invest in a business. That means businesses are just not going to have the same amount of money as they did over the last couple of years, and with rising costs, that is going to be a serious problem. They're going to have to institute more layoffs and more cutbacks. More cutbacks creates a situation in your economy where now people can't get enough things. So even the people that do have enough money in our economy, they can't get anything because there is scarcity. When you have scarcity and not enough money going into businesses and not enough people taking on loans or investors investing enough, now you have a stock market crash because businesses make up the New York Stock Exchange and they are having really terrible earnings reports. The future of the United States economy looks like it's going to be in peril, so investors don't want to put their money in companies if they're just going to lose it in a year. They would rather hold on to it or put it into alternative markets. And so far, that is what they have done. Michael Burry actually takes this one step further. He is investing in two different things right now, and that is it. He basically sold his entire portfolio because he believes the market is destined to crash. He is investing in some ETF funds that invest solely in prison companies and companies that own real estate in the prison business, and also land, and more particularly agricultural land. Michael Burry believes that with all of these big changes coming up in our economy, with people having to face really high inflation and not able to buy things, well, that is going to repress millions of Americans. And when you have that level of repression, things tend to go sideways. And he's predicting that we could see crime rates skyrocket in the United States. Obviously, if crime rates skyrocket, then prisons are going to be a lot more full, and those prisons are going to be making more profit, hence buying those stocks. And with supply chain bottlenecks and resources getting eaten up all throughout the country, he wants to own agriculture and water and all of these physical resources that we are going to need regardless of what happens after a recession. Now you're probably thinking, well, what exactly is the stock market missing here? And what exactly is the Federal Reserve missing? I mean, isn't Federal Reserve Chairman Jerome Powell smart enough to kind of see all of this too? Well, the Federal Reserve doesn't really have any choice here other than to continue to raise interest rates to bring inflation down. That is their only monetary tool. Our currency is the reserve currency of the world. That's the only reason the United States is able to build onto its debt in the first place. If other countries didn't want our money, then the US wouldn't be able to take on as much debt as it can. And as long as the United States currency, the dollar, is valuable to all of these countries, then they're going to continue to take on debt. Eventually, though, that creates a lot more inflation and you have to print a lot more money. But the Federal Reserve actually needs this for the stability of the United States economy. I mean, think about it. The United States has taken on debt for the last 20, 30, and 40 years. That debt that they've taken on, say, in the 1990s is is worth a lot less than it is right now because of inflation. So the Federal Reserve actually needs inflation in order to pay down its debts. All of that debt gets a lot cheaper the more money the Federal Reserve prints, so they don't really mind printing more money over time. In fact, they need to do that so that way the debt becomes a lot less expensive and they can afford to pay it off. The Federal Reserve knows exactly what it's doing here, and for the stock market, they know what they're doing here too, because as inflation rises, profits also tend to go up, and that is exactly what the stock market wants in 2023 and 2024. So look, we don't know exactly what is going to happen in the future. We don't know if the stock market is right, the Federal Reserve is right, or if Michael Burry is right. These are factors that are out of our control, and we don't have any say in how any of these facets of our economy are going to work. The only thing we can do is be prepared with our own money. Understanding how these systems work today will help you to benefit from them in the future, and all of that lies in financial education. At the end of the day, the only thing that matters here is what you do with your money. Today, you have the choice to make financial decisions with your own money, but if the economy goes into a recession, if jobs are lost, now you might be forced into making a financial decision that you don't really want to. So make the choice today to learn how these systems work through financial education before that choice is completely taken away from you in the future. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and learn everything that you need to about financial education and what exactly is happening in the business and financial world, I am putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it from me, everybody. Be kind out there, and I'll see you all in the next one.